morning, viewer. Bendasha. Yes, breaking news. Yeah, global investors are preparing to stake bets on China again. In a major sentiment shift sparked by Beijing's drive to reverse its economic slowdown and revive long-term interest in its stock market. Yeah, it is early days and few money managers expect a Chinese growth boom anytime soon. But government moves to entice more cash into equities and jolt consumer spending have boosted the appeal of still low Chinese company valuations, said investors at group overseeing more than 1.5 trillion of client funds between them. Yeah, we are going to be very disciplined, but in aggregate we feel there's more upside than downside, said Gabriel Sachs, emerging market portfolio manager at Averdeen, which manages 506 billion pounds of assets. He said the group had brought China stocks selectively last week and would wait for more detailed policy plans from Beijing following some unusually candid economic report pledges that generated a sharp stock market rally in recent days. China's factory activities shrank for a fifth straight month and the service sector slowed sharply in September, suggesting Beijing may need to move urgently to meet its 5% 2024 growth target. Long-term institutional investors mostly stayed on the sidelines last week as hedge funds sent Chinese stocks surging to cheer a stimulus bonanza. Data sent to clients to Goldman Sachs strategist Scott Rabener showed. Mutual funds. Yeah, mutual funds, China equally holding dwindled to 5.1% of portfolios, a decade low in late August, Rubner said. Chinese consumer confidence has taken hard knocks from a property crisis rooted in President Xi Jinping moves to stop a pile of risky real estate debt estimated at more than 1 trillion from growing. Meanwhile, US-China tensions have escalated. But investors reckoned the tide was turning after Beijing authorities promised to spend as necessary to hit the 5% growth target. They also eased some home buying restrictions, cut bank lending rates and offered brokers cheap funds to buy stocks. There is too much of a disconnect between what that means Chinese stock valuation are pricing in and that and also the improving policy narrative, said Natasha at Atramis fund manager. She added that she had topped up her Chinese equity holdings in the last few days and taken some new positions. Chinese stocks had their best daily again and gain since 2008 on Monday, but investors cautioned against expecting more such blistering short-term moves. This is a technical, liquidity-driven rally, said George, a Singapore-based portfolio manager at Fidelity International, adding it was likely caused in part of short sellers unwinding bets on share price decline. BNS exclusive report.